What's the catalyst to keep this market moving higher?
AI infrastructure is probably the biggest catalyst that's been moving the market over the last couple of years, and that it's going to be different going forward. That's the market's focus. This AI infrastructure group includes, of course, NVIDIA and Broadcom, the two big AI accelerator chip manufacturers, but then, of course, the hyperscalers that are buying a lot of those chips, and then the networking companies that are selling alongside NVIDIA, Monolithic Power, Arista, etc. That's what's been driving GDP growth and CapEx spending across our economy, and I expect that's going to remain the market's key focus. That group of companies is going to be growing their AI infrastructure revenue anywhere from 30 to 50, 60% in 2026. I think we're kind of debating 2027, and we're also debating how much demand China is going to have for NVIDIA's chips, given the trade negotiation and political back and forth.
Say the country does fall into a recession. Do you see these AI companies being recession-proof?
I think it depends on which category of AI businesses you're talking about. We think about it in terms of three groups. The first is that infrastructure bucket, NVIDIA and Broadcom. The second group are the platform businesses, Amazon's AWS, Microsoft Azure, Oracle Now, Google's GCP, provide cloud computing services that connect AI tools with businesses and consumers using them. And then the third group is software, devices, kind of the end use of AI. The infrastructure group has been the best performing category for years now. This year, I think we've seen those platform businesses in the middle start to participate. Oracle's huge move last week. Google's been doing a moonshot for the last 6 months. Microsoft's been performing great. Amazon has probably been the laggard there, but it will join the rest of the group here over the next year. But then that software devices group has been a big laggard. Investors are seeing accelerating revenue growth from the infrastructure group and now the platform group, but that hasn't happened in software yet. Investors really want to see that. The best performing stock in that has been Meta, and ironically enough, they're the one that's been showing accelerating revenue growth. AI tools are uniquely conducive to the digital advertising business, boosting revenue growth. It's also helping to reduce costs. So Meta and Google have been perfectly positioned to benefit from that. If the AI software group can start to show accelerating revenue growth by cross-selling AI tools on top of their existing software, I think that would get those stocks moving for the first time in a while. If that doesn't happen, this level of infrastructure spending isn't going to pay off. What we're trying to do is invest in software businesses that have leading positions within their industry vertical or customer group. That means they have more data, and that's going to allow them to make better AI tools. One, ServiceNow. Another one is Intuit. And then finally, Tyler Technologies, same thing. They're going to add AI functionality on top of their existing software. That's kind of the investment thesis that we're pursuing with that AI software group.
Watch the full episode of The Money Path by clicking on the link in the description.